Hey everyone, Luminar Technologies updated investors with their latest quarterly update. I'll review the big picture items that came out of Luminar's report, the things investors need to know. I'll also update my recommendation for Luminar stock coming into the quarter. I did not have Luminar stock rated as a buy. I'll update you on what I think about the stock following this earnings review. So let's jump right into the big picture item.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Luminar saying that the Volvo EX90 launch will mark the first time ever that their multi-billion-dollar order book will begin to materially convert into revenue. Up until now, they had a lot of orders for its products, but they hadn't yet implemented those orders. They hadn't yet started to ship those orders, put them into vehicles. The Volvo EX90 will mark the first time. So as a result of the high volume start of production, they expect to ship multiple times more product in the second half of 2024 than they have in the previous 10 years combined, and accelerate from there. So not only is the second half of 2024 going to be multiple times more than whatever they've done in the whole of the last 10 years, but from that point onward, it's going to accelerate. So this company is going to experience exponential growth from here on out. Exciting times to be sure for Luminar and Luminar stock investors. Now, that doesn't mean the investment is a sure thing. There's still a lot of difficulty in executing on this roadmap. There's a lot of difficulty in fulfilling these orders profitably. It's one thing to have orders. It's another thing to execute on those orders at a price and at a cost that generates profit for the business and for shareholders. So it's a good start. Of course, it's great news that you have all of this order, but you've got to deliver and you've got to execute. That's also a challenge. I highlighted the order book. It has $3.8 billion in orders. And in the second half, it's only going to be 2% conversion of that in 2024, and it's going to accelerate in 2025. So they're going to spend years delivering on this order book. Their revenue is going to ramp from here. And if successful, then the order book could increase from here. If successful, if demonstrations prove that these are effective, this is an effective way to enhance. Now, it's not just driverless car technology, right, that Luminar's LiDAR systems are going to help implement, right? It's simple things. Well, I shouldn't say simple because this is quite complicated too, but it's a lot simpler than a complete full driverless system. But like emergency braking, right? That's one part of the whole driverless car technology that you don't have to do the whole thing all at once. Many of these cars are implementing pieces of driverless car technology, one of which is the emergency braking system. Another is the parking feature where it helps you parallel park. Another is lane changing. So there's a lot of incremental parts that Luminar can help enhance for many of these car companies. And that adds value. That adds value and that lowers insurance cost. That increases safety. And so people are going to be interested in this product, and that'll help Luminar grow and expand and incrementally reach the eventual target of driverless car technology. So Luminar is planned into 25 plus commercial programs. The Volvo EX90 is just the start. It's just the start. And it's not just for electric vehicles. It's going to be planned inside internal combustion engines, electric vehicles, of course, and hybrid electric vehicles. So I highlighted some emergency braking. The NHTSA published its final rule, which mandates now advanced, higher speed, no contact automatic emergency braking. This is now mandatory for cars. All new vehicles must have this by 2029. And so that's great news for Luminar. But again, just like I warned investors with electric vehicles, a lot of investors got excited about electric vehicles because the government was mandating every company and every state and rules and such for electric vehicles. But then the government slowly pulled back those regulations and pushed them out and delayed them and made it easier to comply. Same rule follows here. Even though they're mandating this by 2029, that's up for change, right? If it approaches that timeline and it looks like these car companies are not able to get there, I wouldn't be surprised if the NHTSA says, okay, you know what, let's make it for 2034 instead of 2029. So don't count on this as a reason to invest in any company. Never count on a government regulation or a government mandate or a government incentive as the primary reason to invest in any company, because governments often change their mind. A Republican administration might think differently than a Democratic administration. Policies are changing every couple of years. Politicians are changing every couple of years. Do not rely on that to make an investment. All right, so while Luminar's prospects are exciting, its financials, not so much, not yet. So in the quarter that ended March 31st, the company had roughly 220 million in cash and marketable securities. And that's important because it's losing money on the bottom line. I'm going to share with you how much it's losing on the bottom line. But it has more liabilities in 747 million than it has in total assets of 467 million. And this is more important when you have a company that's losing money on the bottom line. The cash balance really matters because it gives you time to get to scale to be self-sustaining. So I highlighted the company is losing money. In the quarter that ended March 31st, total revenue came in at 21 million and total operating expenses were much more than that, which led to a total operating loss of 115 million on revenue of just 21 million. So it's lost more than six times more than it generated in revenue. But remember, it says for the second half, they're going to generate so much more revenue, much more than in all of the previous 10 years. So let's see if that jump in revenue is enough to bring down these losses on the bottom line. But that loss from operations was better than 142 million it lost at the same time last year. Luminar has cut 20% of its workforce. It's outsourcing manufacturing. It's made several notable moves to bring its costs in line and prepare itself to produce at scale. So it has made some big changes. Remains to be seen if these changes are going to be effective. So these are just early days to be sure. And the company's cash used in operations worsened to negative 81 million from negative 64 million in the same time the prior year. So while its forward-looking prospects look remarkable, it has yet to show up in the company's financial statements, which are worsening, and the balance sheet is worsening, cash flow from operations is worsening. So I really need to see great progress from Luminar as it ramps up sales, as it ramps up production and delivery. I want to see that reflected in its financial statements. So as of right now, it's trading at a forward price to sales of 3.05. And while, like I said, its prospects are excellent, I've had Luminar stock rated as a hold, and I'm keeping Luminar stock rated as a hold after these results. Although I wouldn't be surprised after 1 or 2 quarters if it demonstrates excellent growth in revenue while keeping costs under control. I wouldn't be surprised if I upgrade this stock in the next 3 to 6 months. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.